everyone, and welcome back to another session of the Market Outlook series with me, Kavita Agarwal. I am the founder of EXP Invest, and we are here, like every weekend, to talk about Nifty, Bank Nifty, and the Intersector Analysis. So let's start with the chart of Nifty and see what has unfolded this week, and then we will decipher what it tells us about the weeks coming ahead. So this is the 3-minute time frame of Nifty. And if you see this Monday, this is where we started this week's activity. So up to last week, I had been repeating that 21,850 was a very important resistance for the market. And what we can see is on Wednesday and Thursday of last week, when we consolidated here, this 21,850 is the level where we saw some consolidation on market. And once we broke out above this level, a strong rally began. We did see some rally before that also, but the problem was that conviction was really low there. Now, RSI has also played a very important role in this rally, because if you see the 3-minute time frames, RSI was very evidently in a bear range up to this point, right? It was only when the Nifty actually sustained above the 21,800 level here that the RSI on the 3-minute time frame also moved above the bearish range. It went into the bullish range. That is, the resistance went above 60, somewhere around the level of 80, and the support went above from below 30 to somewhere above 40 for most parts, right? Then up to here we had a strong rally ongoing. Here this was the part where we had the strong rally, and then once we broke below this was an indication that there was some loss of momentum. Now, following this loss of momentum, we experienced a little bit of correction again, but then this correction was soon broken out when we saw a positive divergence, as you can see already marked. Now, this positive divergence has now led the market to a new lifetime high today. Now, 22,250 was my next important resistance on the market. And here it is evident that in today's market activity, that resistance was slightly breached, but also respected. So what is next? My analysis suggests that we are still in the bull range, considering that the RSI is still above the level of 40. Now, if tomorrow it so happens that the RSI of 3-minute time frame breaches below the level of 40 and the price of Nifty breaches below the level of 200, then we can expect the level of 22,000 to get retested. So it's not very often that the 3-minute time frame has such a lot of insights to add, but this is quite a bit. Let's move on to the 15-minute time frame. Now, what the 15-minute time frame suggests that we've been in a bull range since this day, since the day of January 25th. So since January 25th, the bottom that occurred in the market has been pretty bullish. The trend has been pretty bullish, and this rally is also expected to continue as we move forward. Currently, there is a little bit of an indication of a negative divergence on the 15-minute time frame, if you see, because this high on RSI is clearly higher than this high on RSI, right? So there is a bit of a negative divergence, but I wouldn't give it a lot of importance at this point of time. For this leg of rally that has started since yesterday, I believe that 22,500 is a good resistance, is a good potential resistance for this rally. Moving on to the 75-minute time frame, what I can see is that the 75-minute time frame has been very bullish for an even longer time. So if I draw this line, so it has been sustaining above the level of 40 since this date of 1st November 23. So what we can see is that even though the RSI here hasn't completely breached below the level of 40 or hasn't sustained below the level of 40, negative divergences have definitely started to form on the 75-minute time frame. Another very noticeable thing is that this upside that we've experienced, right, or not just this upside, this point, ever since, I have to say, actually, ever since January, the market has been really volatile, has been really choppy. And it is very evident actually on the 75-minute time frame why. If you look here, this is a very good uptrend. This up to this point of 15th of January, this trend was really good. For a swing trader, it's a boon. It's really great to trade in this kind of market. Everybody makes money. But what happens when this kind of choppy market begins is it becomes harder and harder to make money. The problem is that the rally which has unfolded before it has been so strong and has been so overconfidence evoking, that it becomes easy to let go of your principles, of your systems, and get used to not setting stop losses, right? Also, in this consolidation phase, in this sideways, in this choppy phase, what also happens is that a lot of stop losses start getting triggered. You start seeing stop loss triggers and then rallies. You start seeing gap downs which skip your stop losses. So it becomes really hard to preserve your unrealized profits and to protect your capital from loss. So a very good strategy during a choppy market is to change your strategy, change your focus from stock picking to capital preservation. This can mean two things. Number one, try to have less number of active positions, and on your stop losses, try to keep them, try to be very vigilant, and don't stray from your strategy or your principles in such a market. Because if you break your discipline in a choppy market like the one that we've been experiencing since January, especially since here, so this kind of market, so if you follow this with me, we went 890% down in 8 days. Then we went up again 870% points in 9 days. And then again we fell around 500 points in 11 days. And again we went up around 600 points. So in this kind of market, this kind of choppy market, it's very hard to stay put. It's very hard to make money. So for swing traders, it becomes really hard. So as swing traders, we cannot also, we don't want to sit on cash for a very long time, but it's okay to have 30-40% cash at least around this period of time. It's okay to experience stop losses. Don't get deterred by stop losses is what I'm saying. So this 75-minute time frame is actually giving us a bit more clarity on the bigger picture, that okay, the market is super choppy lately, and if you see the distance between important moving averages like the 200 EMA and the price is now narrowing. So at this point of time on the 19th of December, it was high. So the distance between the 200 EMA and the price was actually, I would say, the highest somewhere around this point when the RSI was at its peak on the 75-minute time frame. But you see, ever since that distance has been narrowing, the RSI also has been forging a negative divergence. All right. So this is a bit of a warning. Oh, there is another very clear-cut warning sign in this last leg of rally that we've experienced, the volumes. Now, if you see, even in this rally that happened, there was participation. But in this leg of rally that is unfolding, the participation has been quite disappointing. This is another sign that, a massive exhaustion might be setting in. Also, if you can see this, let me make this a little bit thicker for you. There are trendline resistances around here. So what trendline resistances basically mean is probably in the past, right? Probably in the past, somewhere this this trendline has been quite important. So I don't really see much in the past from that perspective, but nothing very, very significant, but there seems to be some resistance. So my target on Nifty, while it is 22,650, I believe that we are kind of getting closer and closer to a bigger correction. uh, than to probably a next leg of upside. It is very important to maintain high amount of caution right now. Don't get tempted by FNO opportunities. I mean, you think they're opportunities, but they're really just traps. So don't be reckless at this point. Focus more on risk management and most importantly, exercise patience. Moving on to the daily time frame. So the daily time frame resonates with the message which the 75-minute time frame was whispering to us. That is, there is some loss of momentum for sure. There is a RSI negative divergence falling, and there is a very evident lack of volume participation in this rally. So we can expect some correction. Now, what will be the depth of that correction? At this point of time, it's really hard to say. But if we do start to correct, and I believe if 22,000 gets breached, because 22,000 has now become a very important support level. So if this 22,000 gets breached, then I believe we may fall as far as 21,500. Yeah, so this 21,500 is where I believe the market can potentially fall to if there is a correction, because, and the reason is basically this trend line here. Let me make this heavier. This is going to lend important support to the price as it has in the past two swings within this upward trending channel that we are seeing Nifty is kind of oscillating between. Now, if 21,500 gets breached, then the next support comes in at the level of 21,000 here. So this would become our next probable support for the market, which also coincides with the 100 EMA right now. But like I said, at this point of time, if you see, the upside is relatively lesser to the downside. Having said that, the overall trend, now if we look beyond just this peak, right, the trend that has been unfolding in Nifty is really strong, and I do believe that it is set for a further continuation, maybe some correction. Like just here, if you notice, there was a negative divergence which was watched, and then we experienced some correction back to the 200 EMA. That was around 6%. So if we were to say begin a correction from here, around 5 to 6% would be around 21,000, like I said. And also one more common point between this last leg of rally and this leg of rally is the volume participation. So if you see the second half of this, so when this previous rally's last leg also unfolded, the volume had disappeared, and the same thing is happening again. So these are the reasons why I believe it's very important to experience caution and only participate where you have very high level of conviction. Go for high risk reward ratios in your trades. Make sure you use stop losses, and don't get tempted to re-enter stocks, where stop loss is getting triggered without solid reason, without solid objective reasoning. In this market, I'm seeing that even the stocks that I'm re-entering due to solid chart related reasons, even those views are getting invalidated repeatedly. So it's important, extraordinarily important, to experience caution, especially for those people who are new to the market and who've not seen a lot of correction. I'm aware there are a lot of people in the market right now who've started trading just 2, 3, 4, 5 months back. So the fact is that since October 23, we've not really seen a major correction whatsoever. The last 3 months have been very, very bullish. And even since before, a proper major correction was actually seen in March 23. So people who've entered after March 23 need to be especially cautious, because if a proper correction begins and the market tests 21,000, it can be painful. So let's move on to Bank Nifty with that thought. All right. So this is the 3-minute time frame of Bank Nifty, and what do we see here? We do notice that here some positive divergence was noticed, and the Bank Nifty actually on the 3-minute time frame gives pretty good indications is what I'm seeing. So 46,700 was a resistance. It was respected and the market went down to basically retest its previous low, which is good. What do we see here? A small RSI negative range shift. I wouldn't really call that a negative range shift per se, but some bearish signals were there on the charts. Even now, we on the 3-minute time frame, really the Bank Nifty is not as benevolent on the 3-minute time frame as the Nifty was. So let's move on to the 15-minute time frame and take a look. Here again, a strong positive divergence was seen. We did note this, by the way, in the session that we did on the 26th of January on Friday. It was a holiday, but I did the session anyway. I had indicated that some positivity, temporary positivity might be noticed, and we saw a rally for like just 1 week, which then fizzled out to another correction. Now what I see is a higher low and a higher high has been forged with on the Bank Nifty, but is this going to sustain? A 15-minute is not very helpful. Beyond that, let's move to the 75-minute time frame. On the 75-minute time frame, it looks like the negative divergence which we saw here has actually already played out. And what I'm seeing on the 75-minute time frame, Bank Nifty is actually looking significantly more stronger than Nifty for a change. So since this point, right, since December and pretty much all of January, most of January, I had been saying that banks don't look so strong, but Bank Nifty now actually is looking stronger than Nifty. Now let's move on to the daily time frame. And yes, on the daily time frame also, it does suggest that this correction to the level of 40 is kind of fizzled out. But it's also noticeable that the volume participation on the Bank Nifty is also not as impressive as it should ideally be, because the price has gone up, but the volume hasn't so much. This worries me a little bit, because we've seen in Bank Nifty time and again that, you know, when it bottoms out, it does start with, it does give some indication, some volume indication. Here, it really hasn't. So it is a little bit of a cause of concern. So Bank Nifty, I would say, is a little bit on the confusing side with respect to, what to expect. If I had to give you a resistance on Bank Nifty, let's see if I can draw this trend line here. So this trend line has been respected pretty well. And I can see there is this trend line as well. So if the market does get weak, I would think 47,850 would act as a good resistance for the Bank Nifty here. In fact, given the presence of the trend line and given this whole consolidation period here, right? So you see this consolidation that had happened in Bank Nifty, which actually led to this correction of 7% in the month of January, is very similar to what we are experiencing in Nifty right now. So when I say that a 5 to 6% of correction is expected, it's not off the hooks, because we've already experienced that in Bank Nifty and it was quite painful for a lot of people. So caution is definitely required. And even in my Trade Together program, especially with respect to the new joiners or joiners who are new traders, there is a lot of anxiety building up, which is very evident from the comments being left in the chats. And I do my best to share what is happening, because anxiety is a very normal part of trading journey, but what matters is to trust the process and to stay put with the strategy. If we try to change the strategy or question the strategy, then we have very little to work with. On that note, let's now move on to the indices chart. Now, let's see which sector has led and which has not done so well. So since Friday, if we see, the realty sector has come back up at the top. So the rally in the realty sector was expected to continue, and it has done pretty well in those terms. The auto sector also, I can see, has done quite well this week. That was not my expectation, to be honest. The pharma and the healthcare sector, even though they are doing weak, I feel that new positions should be made very cautiously here. The consumption and the durable sector finally seems to be coming out of a slumber. Also, the fact that the consumer and the pharma, the durables and the consumption sector is doing so well. So is the FMCG sector. It shows that the participation is leaning a little bit more towards defensive sectors. That concerns me a little bit. But having said that, the IT sector, where I said that some correction was to be expected last week, I feel in the last 1 or 2 weeks, some correction has happened in the IT sector. So I would like to actually check out the chart of CNX IT and see whether it is looking attractive for a potential entry. So no, even the IT sector seems to be having it a bit rough in the sense that it's experiencing some choppiness, and very evidently there is also a massive negative divergence which has built up here, because even though the price of the IT sector has gone up, the RSI has gone down, which is a very telltale sign of loss of momentum. So we can expect some correction here at the least, because there's been quite a bit of rally. So maybe fresh positions are still not, I wouldn't recommend fresh positions in the IT sector at this point either. So the PSE sector has taken a little bit of a beating. So let's take a quick look at CNX PSE. And what do we see? We see there is a negative divergence there as well. Again, see, wherever there's been a lot of rally, you can try to buy a dip in order to get a favorable risk reward ratio, but do not buy a stock after the rally, because there your probability of losing your capital will be really high. Now, having discussed that, I would like to now turn my attention to answering your stock queries. So if you have stock queries for me, you can ask them by going to this link, exp-invest.in/stock request. So you will see this form. What will happen is you need to fill in your name, number, and your ticker name, basically the name of the stock, the ticker name of the stock in which you have a query. How do you do that? You go to Google and you search the name of your stock and write ticker name after it. Google will tell you what is your stock's ticker name. Enter the name in the format NSE and ticker name, just like it is mentioned here in the example. You will mention the name here and you will mention your average cost price. On the basis of your input, I will take a look and my team will get back to you with my response. Okay. There are some terms of use. Please make sure that you go through them. So now let's start taking a look at queries. So every session, I try my best to answer 10 stock queries for the members who fill the form. So we have a query from Swananda Hedge, Adani Power, consolidating in the range of 540 to 570. Consolidating, okay. So the cost price that they bought at is 250. Oops, wrong chart. Bought at 250. Oh no. Okay. So I really believe that Swananda, you should exit the stock, because I can see that there is already 75-minute time frame is showing negative divergence. There is a very strong resistance also here. I understand that your position has rallied 100%, so there is temptation to hold on, but also on the daily time frame, loss of momentum is very evident. Not only that, if you look at the volume participation also, right, the volume participation has not been keeping up, especially since the volume participation is expected to decline when a stock is in consolidation. All right, so here's what you can do. Since you are already holding the stock since the price of 250, which is around here, right? Let's make this a little easy for you to see. Right. So So this is your entry point. So naturally, you don't want to exit the stock unless you have strong reason to. So if your position is for a relatively shorter time frame, right? I'll give you two stop losses here. So if your position is for the shorter time frame, then what you can do is you can maintain a stop loss below this consolidation zone's low. That would be around the level of, so 500 is a important psychological level, so around 495 is where your stop loss would be, right? And if you are okay holding this stock for potentially a next leg of rally, which I'm not very convinced. Okay, there are some indications of it, not very strong, but there are some indications. So if you do want to, as a matter of fact, hold the stock for a potentially bigger rally, then you should maintain a stop loss of 377. So 495 or 377, depending on whether you want to hold it for short term or long term. Moving on to Bajaj Consumers for Ajit. He's bought, okay, so he's holding since 245. Bajaj Consumers. Oh, nice. This is nice. Right from the 500 EMA. Okay. Let's delete some extra drawings. Volume participation has started to catch up a little bit. And 245. So you're in a little bit of loss. So the last few days rally must have been a sigh of relief. Now, what you need to understand with respect to Bajaj Consumers is this stock is, let me just confirm before I say it. It's actually a slow mover stock in the sense that it definitely gives you movements, but it takes a lot of time to do that. Okay. So if we have to note down its decision making time frame, I would say it's weekly, and the kind of movement it gives is a slow mover. So the problem is that this kind of stocks, they are good for, I would say, a market where you need defensive stocks. So if the market starts to fall and you absolutely have to park your money, then Bajaj Consumers is a good stock option, is a good option for you. But in a bullish market, you don't want to go with a stock like Bajaj Consumers, right? So having said that, considering that the market's stance is changing at the current moment, it is standing at a bit of a cliff. What you can do is you should definitely maintain a stop loss at the level of 230. If the stock falls below the level of 230, you should consider exiting your stock because you're already in some loss. You don't want that loss to grow. The best time ideally to usually buy this stock would be when it comes close to the 30 level on the weekly time frame, and it does that quite like maybe once in a year, and that is a good time to buy it. Otherwise, even the daily time frame, if you see, the signals are very unclear. There's a lot of noise on the daily time frame. So Bajaj Consumer is actually not a very good stock for short-term trading. Try to avoid this kind of stock. All right, let's move on to APL Apollo for Deepak Patel. Purchased at 1518 and now is 1480. So what to do? Okay, let's see. See, APL Apollo is a really good stock, and if I have to tell you what personality this particular stock has, I would say it's a super duper trender, which means it means two things. Number one, once it starts to rally, right, it moves in one direction for a very extended period of time. And if you see on this daily chart itself, when it is in the trend, whenever it is in the trend, the 200 EMA acts as a very important support. If you see the price right now, it was in the trend, it took multiple supports of the 200 EMA, went up, but recently it also broke below it. So what does that mean? Is the weekly time frame giving us any indication? It did give us the indication there was a negative divergence, but that kind of fizzled out here. We saw this and then some of this. Good part is that in this downside correction, the volume has been pretty bad, which means that the volume was strong on the upside, the volume was bad on the downside, which means the bull trend is still pretty strong. On the daily time frame, the RSI has been respecting the level of 30 pretty well, and up to this point, up to the high, the real highest high that was forged, RSI did create higher highs too. So there is no negative divergence per se, except for the fact that, you know, the matching high or the double top that was forged with a lower high, but that's okay. I mean, that's, you know, every stock needs a bit of a breather. Here the stock had gone up 66% in just like 3 months. That's fantastic move. Let's also take a look at the 75-minute. So the stock is also actually, so the stock is a combination category. It is a momentum mover and a super trender, which means on the 75-minute time frame, it gives very good indications. Also, what the weekly time frame is suggesting, that on the weekly time frame, the RSI has almost touched the level of 30. So here, if my alert of a proper touchdown on the level of 30 is triggered, then this stock is a massive buyer for me, right? From a long-term perspective. Even from a short-term perspective, what I'm seeing is when the stock comes down to the level of 30 on the 75-minute time frame in a bullish underlying trend, it becomes a very good candidate for a small upside. For example, here if you see, it gave like 16% in 22 days, came down again, gave 15% in 30 days. So, you know, this is how I like to study stocks. I like to identify what is the decision-making time frame and what are the personalities. So on the weekly time frame, there is some decision-making scope, and on the 75-minute time frame. And if we talk about the personality, it's a super trender and it's a momentum mover. By the way, the personality and decision-making time frame, all these things that I'm talking about, I teach all this in my training sessions, where I go into the depth of why, on what basis are we defining the personalities, what is the decision-making time frame, how do you work around it. This is basically an entire ecosystem of swing trading. And if you're somebody who's interested in learning this from me, then do check out my advanced technical analysis training program. I will be sharing the link in my Telegram channel. So what you can do is you can join my Telegram channel. This is my Telegram channel. Right now it has about 4,400 subscribers. So what you need to do is go on Telegram and search this Trade with Kavita. This is the link. I'm also dropping the link in the comments, of course, so you can click it from your phone and you know, join it quickly. So another advantage of the Trade with Kavita channel is that every day I share my market commentary, which will help you get a sense of the market direction. So you can rely on that. And whatever stock ideas I'm giving in my premium channels, Esteem, Elite and Exclusive, a sanitized version of that is also posted here in case you're looking for stock recommendations to go long on. And time to time I post, so every day there are also quizzes, and time to time I keep posting my own insights about the market and how you can become a better trader, and snippets of any conversations which, you know, I might have had with someone who's a beginner in the market, which I feel can help someone else. I make sure that I share them with permission. So coming back, let's move on. APL Apollo, what to do? So like I said, Deepak, APL Apollo actually looks really attractive for the long term. So you can consider holding it for sure. I know you're experiencing a little bit of loss here, but don't worry. APL Apollo is a really good stock. It's one of the stocks which, you know, you can definitely invest in for long term. But even from a short term perspective, right, I feel like APL Apollo has just okay, actually from the short term perspective, there is a bit of a I would say it has not really proved itself. So until and unless the 75-minute time frame doesn't go above the level of 70, right, it's really hard to say whether a new bull trend is about to begin or not. So I would strongly recommend that you use a stop loss here, and you should maintain a stop loss at the level of around 1398. If that gets breached, then there's a good chance that the stock can go as down as low as 1255 to retest its 500 EMA, right, on the daily time frame. So that's that. Now for Amani, we have Urja request. I have a huge holding. Where can I exit? And the cost price is 36 rupees. Why do you have a huge holding in a stock like Urja? It's extremely illiquid. It's extremely risky. Let's take a look at the market cap. Oh my God, it's a micro cap stock. Don't do this. It's not micro cap. I mean, it's small cap, but it's barely a small cap. You know, it's as good as a micro cap stock. You don't want to put your money in stocks with such liquidity, because if you look at the trend of the stock, sure, it gives you incredible rally of 10x in like 3 months, but then when it declines, it also declines 90% in like 2 years. You know, this is the kind of movement, 35x and then down 80%. Now again, it's gone like 5x. What are you going to do if it falls like 84%? Your capital is completely gone. You know, these kind of stocks, if you buy only if you have conviction in the management in the company, you've done deep research, and you know you can hold such a stock for like 10 years. These kind of stocks are bought for, you know, like R ya par. Like you buy it for 100x returns, or you buy it and hold it till it gets delisted or goes bust. Okay, so don't try to do short-term trading. Micro cap stocks are not meant for buying, not meant for 2-3 years of holding. They're meant for like 10, 15, 20 years of holding, if they survive, that is. So I can't even suggest an exit to you. The stock it barely opens for trade. I would suggest that, you know, if you're not convinced about holding the stock for a long term, whatever opportunity you get to, you know, exit, you should exit it. Now, Ashish is asking for SBIN. What is your view, both long and short term? He has a cost price of 700 entered. All right. So the rally in SBIN has unfolded pretty strongly up to this point, but what I can see is after this point, the rally has kind of lost its steam. So from the short-term perspective, I would expect the prices to come back and retest the level of about 700. So if you have a position right now, I would recommend you to set a stop loss at the level of 748. And from a long-term perspective, again, from the long-term perspective also, I feel like SBI has moved up quite a bit. How much more upside can we really see? Considering that it did give a breakout above this trend line here, the question is whether it's going to sustain it. The volume activity suggests it probably won't, because, you know, this entire area is fraught with multiple resistances, you know, multiple price resistances. So it's going to be a little bit difficult. I would suggest if SBIN continues to move above the level of 800 with strong volumes, then you should continue holding your stock. For both short term and long term, I would strongly recommend. So for the short term, you should maintain 750 as the stop loss. But if you're also keen about holding the stock for the long term, then for the long term, you should observe a stop loss at the level of 636 on SBIN. For Tejas Thakur, let's talk about Wipro with a cost price of 608. Okay. Okay, a strong rally has been unfolding up to this point. The rally was unfolding with good volumes. Let's take a deeper look at whatever happened here. I think this was probably the results. Okay, that's fine since the high has been breached. But the problem is that the volume has kind of dried up. Okay, let me remove this. The volume kind of dried up at this point, right? And the rally which has unfolded since then has not experienced a lot of volume. This doesn't give me a lot of comfort. And if you see the past analysis, Wipro does have this theme that, when an ongoing leg of rally is about to get exhausted, what it does is it exhausts, like volume exhaustion becomes very evident and the stock declines. So I'm a little unsure. I mean, I definitely wouldn't go ahead and purchase fresh holdings in Wipro at this level. How is your cost price 608? My God, since when have you been holding this stock? Since 21? Okay, what I would suggest, so in Wipro, you should definitely maintain a stop loss of 518. So at any point of time, if Wipro forges a lower low, you need to get out of it. And right now, the most recent low on the 75-minute time frame chart is clearly 518. So that should be your important stop loss level. So Mr. Sanjeev Pandey, he's a newfound esteemed member, and I'm very glad that he's already participating in the resources, and he wants the analysis on ITC. So ITC is actually one of the stocks that I've been eyeing to, give to the members of the Trade Together program as a recommendation for swing trade. And if you see this flag, it means basically that it's under consideration. Now, there is a strong positive divergence on the 75-minute time frame. And so whenever there has been like tiny little up prices, there has been some strong volume activity. This is a very early sign of a potential strong reversal, but it remains to be seen whether or not this solidifies, whether or not this materializes into a proper beginning of a rally, because like we discussed on the 75-minute time frame of Nifty, there's a little bit of indication of weaknesses. Having said that, both the 75 and the 15-minute time frame of ITC do look very, very strong. I am waiting for two things to happen on ITC before I give a recommendation. Either the 3-minute comes down to the level of 30 or the 15-minute comes down to the level of 40 on RSI and RSI 25 period on both charts. When that happens, I would suggest it's a good point to, make fresh entries. Now, from a stop loss perspective, since 400 is an important psychological level, slightly lower than that, the stop loss needs to be maintained at maybe 398. And on the upside, if we talk about the target, then I think potentially I wouldn't be as overconfident to predict that ITC is going to create a actually this correction did start with strong volumes, but then the volume has kind of receded. But then there is also this 500 EMA of the daily time frame which might get retested. So that's why I'm a little bit jittery, because even though there are positive divergences, there is a pretty good chance that the stock can go up like just 4-5% and fizzle out. So risk management, like I said, is very important. And when the market is so choppy, you will see positive signals on the charts, but a lot of time those will turn out to be either weak signals or fake signals, which means that prices will go up, but they'll fizzle out pretty fast. So a lot of caution needs to be maintained there. So I would suggest, Sanjeev ji, you hold on and let me tell you when it's a good time to make fresh entry in ITC. Right now, it requires a little bit more confirmations. All right. So with that, we'll put a wrap on this session today. I hope I was able to add some value to you. If I did, please don't forget to give a thumbs up to this live stream. And I will see you again on Monday in a session where in part 2, I'm discussing how to identify swing trading opportunities using charts. So if you haven't watched my Wednesday's session in the Let's Get Technical series, where I talked about the logic of identifying opportunities in swing trade, make sure that you go to my YouTube channel and watch that video first, because otherwise the Monday session might not feel very meaningful to you. I'm going to drop the link of the previous session in the comments for you to go and watch right now. Give me a second there. Um, mm, mm, mm. All right, let's go over to my channel, and on my channel, if I go on videos, stock selection webinar recording. So this is the session. I will just copy the link and let me drop it in the comments for you. So I've dropped the link in the comments. Make sure that you go ahead and join it. Oh, so Weber was asking, how do I join your Trade Together program? The first step for you, Weber ji, would be to join my Telegram channel. And from there, you can, find the link to my Trade Together program. There are different plans, pricing. You can also book a call with my team to understand, what suits your profile best. They've been trained by me and they do their best to give you the right guidance. And, if there is something which is beyond them, they bring it to me and then I get involved. So with that, thank you so much for giving me your time and your attention. The stock queries which have been resolved by me in this session will be communicated to the questioners, to the askers, and I will see you on Monday. Thank you so much for joining in. Namaste.